Switching tracks now, gold prices have hit a record high. How uncertainty has impacted precious metals. We're talking about gold and silver rates that have spiked due to a rising uncertainty. This comes after the Iranian leader who died in that helicopter crash, and the US Fed rate cut is what is expected, and that has what has really pushed the gold prices. My colleague Sakshi has the details.
Gold prices hit an all-time high, a record high, and silver prices continue to jump on rising uncertainty. Rising geopolitical uncertainty, remember, was already there in the Middle East, but political uncertainty also, experts believe, has added to that layer. And of course, precious metals reacting firmly. We've seen in overnight trade, gold and silver prices surge, and gold hit another fresh record high. Now, geopolitical tensions, remember, boost the safe haven appeal for precious metals, and therefore we have seen the significant jump in both gold and silver prices. Gold rates are also jumping, many believe, on expectations of the US Fed cutting rates. Now remember, gold historically has had an inverse relationship with interest rates, and therefore you see this significant jump in prices. Needless to mention that we have, of course, over the past few days been reporting how emerging central banks are continuing to purchase gold, significantly so, and India's gold demand has also risen 8% in the March quarter as per the World Gold Council. So that really is how precious metals are reacting. Remember, rising geopolitical concerns always boost the safe haven appeal for precious metals. Now, to decode this further and overnight trades further, I'm joined by Samina from NDTV Profit. Samina, take us through the specifics of the gold rates spiking in overnight trade.
Sakshi, there's so much happening for the commodity, right? But just to add some perspective to this, the last decade returns of gold actually have beaten the Nifty. So it's about 12% on gold itself, which is a safe haven asset, like you mentioned. In the last 1 year, gold is up 23%. A few more triggers that are driving precious metals and, of course, base metals as well has also been the expectations of a rate cut from the Federal Reserve, which means a weaker dollar. A weaker dollar has an inverse relation with gold. So if you have a weaker dollar, you have stronger gold prices. That's the other trigger point on gold prices. Apart from that, there's a general expectation, at least in Asia, that of course the Chinese government will be coming in with historical steps to boost the property market in China. This stimulus, of course, will give an impetus to gold prices, and we're seeing that very evidently on the way gold has been trading. Locally, of course, we've seen unprecedented demand for sovereign gold bonds, which hit the market every quarter, and of course with an expectation of an SGB opening in the next couple of weeks. You could see gold prices actually heading higher from these levels. Like I said, and like you said as well, it's not just gold. Silver is up 18% year to date, and expectations are that silver along with gold could continue to move higher. So the gold metal continues to draw attention from investors and of course safe haven buyers as well.